Hi everybody, this is Hyperwave. I am streaming from my favorite coffee shop. We have been spending the whole day working on the webinar, which has been awesome, and yet my brain is mush. So I have already gone through 2 full cortados. Now we have Tyler here, who's wearing a very particular hat. He picked it out because he fully believes in this theory. I'm gonna right over to him. Very serious look on my face because we've decided that we believe in hodling everything, Bitcoin and all stocks and absolutely everything. Tyler,
No,
is that true?
It isn't. This is my anti-hodl hat. When you see me wear it, it means anti-hodl. I don't believe in hodling anything. Gold, stocks, real estate, Bitcoin. This is, wow, what a fun 48 hours, 24 hours, huh? Yesterday we talked about, is the U.S. stock market bullish? And here we've got a lot of evidence the U.S. stock market might be bearish less than 24 hours later. We looked at 10,000 feet down only at the price. Now we're going to have to superimpose sequential and one other indicator on top of the same charts we looked at yesterday, just to indicate how different they can be and why it is so important to use money management. You don't simply make up a decision based on one thing, like breaking out above a neckline of a inverse head and shoulders, until you get to the close on Friday, which was now 1 hour ago. So I'm going to pull it up. We're going to go through it quickly. We shouldn't take more than 30 minutes. But maybe there will be some good questions that Leah can direct our way. So I am going right to screen share.
More like comments time. I mean, people are asking about doomsday.
Oh, yeah, I know. It was a tough day. Okay, same charts as yesterday. I've still got my weekly inverse head and shoulders on the S&P up. If we get right down to it, we've got a 9 sell signal, but it was a green candle, and we have a green 9, but then we had this action today. Now we don't have lows below anything yet, but notice that we closed back below the neckline that we were over yesterday. So let's take a look at the daily chart. And you can see that we had 1, 2, 3, 4, 5 days above, but we knew we were coming up to a 9. This is the 8, and on the 9th candle, we got this big 1 down that on a daily basis, and with an aggressive 13 yesterday, tells a completely different picture. Way too early to say, but this is now a weekly candle that is closed below the trend line breakout 5 days before. So remember what we did yesterday. We looked at the S&P and then the NASDAQ. So let's do that. This is the NASDAQ composite. Here's our 9 on the NASDAQ composite on a weekly basis. Now, a week and a half ago, 2 weeks ago, we had a green 1, we had a green 2 that went above the green 1, but then reversed and gave us this weekly reversal candle going into next week. Now, we're not going to get a flip in terms of the sequential because we're so far above the 7 and the 8 candle, unless this really falls apart next week on a weekly basis. But on the daily basis, we didn't make it to a 9. We had a C13, an aggressive 13, and a sequential 13 in a row. And we now have a red 1 because of the close this week. So short term, we're expecting at least a 1 to 4 day pullback, which will then bring into play the weekly candle next week. So 1 to 4 days down could be enough to start giving us some very negative signs. We are looking at the strongest indexes right now. The very same thing happening on the NASDAQ 100 with the 9 sell here, but immediately a green 1 last week, a green 2 this week, but another reversal candle on that. Now let's look at some of the weaker indexes, starting with the Dow Jones Industrials. Remember that I've been talking about on a daily basis a thing called a broadening top, which we do not have on the Dow, but going quickly back to the S&P, we clearly have it. 1, 2, 3, 4, 5. And on the NASDAQ, 1, 2, 3, 4, 5. And of course, on the NASDAQ 100, same thing. 1, 2, 3, 4, 5. Now, the reason I'm bringing those up is because on the NASDAQ, we had a broadening top last year. 1, 2, 3, 1, 2, 3. I can't find it there. Let's look at the NASDAQ itself. 1, 2, 3, 4, and 5 that immediately didn't give us any sort of a sell signal, but then resulted in this. Now, on a daily basis, it's not nearly as significant as a weekly basis. And on the weekly basis, we haven't got high enough on this to give us a broadening top, but we would have if we had continued up from here. So this is a little bit different on the long-term chart. And we do have this very bullish inverse head and shoulder, but as I said, it's now in question because we don't know exactly how far this is going to drop down. Tone has been saying that it would be great to get a pullback down to this weekly neckline, which we could get over the next several weeks and then move up from there. But it's a very different picture than 24 hours ago. Now let's take a look at the Dow on a weekly basis. And as I said before, it had not really, it had struggled at this neckline with this big drop on 8. It tried to come back yesterday and now is being reversed again. So the neckline on this is way up here. It's got a lot more to do to get back up to that. And we never crossed above it to the upside. The Dow Transports has been considerably weaker. And today you see what it did. The Dow Transports were down 2.25%. And we had an engulfing candle on the weekly where we had the high today higher than yesterday's, or this week was higher than the high yesterday, and now we closed lower than the low last week. That's a very negative picture. We've also got a 3 that has crossed below a red 2 on the Dow Transports on a sequential basis. So if we're just looking for a pullback, we're already going into week 4 of that pullback, which could continue lower all the way down to another 9. I want to look at the Russell, which was down a lot. We did get a 9 on the Russell. We have a 2 going below a 1 on a closing basis here. So we are in a 1 to 4 week pullback, which means it could end right here and we could start going up from here, or it could turn into something bigger. So on the major indexes, we've got a bunch of questions developing. I do want to show you a very important development today, which is that the 3-year and the 10-year yields inverted today. Now, I'm looking for the 2 and the 10-year, which did not invert, but we're getting close because now we're down to the 3. We've already inverted on some of the lower ones. So this is the next biggest one up. And this is a tremendous drop. As you can see, it's taken out all this support. Now we're working on all of this support here. And now we're working on the support over here. And we closed right on it today, this red line. When interest rates are dropping this rapidly, and we know it's because of what the Fed said on Tuesday and Wednesday, this is signaling weakness in the economy, not strength. We also had big drops in the commodities today. This is lumber, which is now on a weekly 4, new closing lows since the top. The crude oil market put in a reversal after this 9 and pulled way back. It had been stronger earlier in the week. On a daily basis, you can see this reversal off of another 9 on a daily basis and a red 1. So what's basically happening here, we'll just take a quick look at copper on a daily basis, big pullback, and on the weekly basis, we had a 9 last week. We now have a red 1, and we've started a movement that might only be 1 to 4 weeks, but it might turn into something more. Here is the 2-year T-note. And this is the yield, the price of the note, which is moving up inversely to the yield. And you can see the tremendous spike that we had here. This is the largest up move in price in the 2-year note that we have had for many, many months. We looked at copper briefly, the pullback off the 9. Gold was flat. after this big drop, and we are on a red 4. And any turn down from here, we are coming very close to this trend line. I would expect if we continue to see oil, lumber, copper weakening, because the dollar had this big drop last week, and the dollar is still in this trading zone. But that was a tremendous move down. Now we have a little bit of a possible reversal candle, a dragonfly doji basically, that could mean that gold and silver are going higher. Silver did not have a great day. It's on a red 4 off of this big drop off of this 9. I think the jury is still out on the gold and the silver market. FedEx that we looked at yesterday, down again today. We're on a red 3 after trying to bounce. Looks tremendously weak and tends to be a leading indicator. Okay, now the other thing we looked at, and I thought was very interesting today, are the sectors. So we're going to look at those charts using the sequential. You see the big drop. This is the Russell. I want to start with the consumer goods, which were down today 1%, which was one of the stronger areas. Consumer services down 2%. Energy stocks down almost 3%, 2.78%, after stalling out below this setup trend line and hitting a 9 2 weeks ago and having a big reversal candle with a red 2 this week. Financial services took a tremendous hit. The banks got creamed today, down in some cases 3, 4, 5, 6%. And for the week, were one of the weakest sectors, which we talked about yesterday briefly, that the banks and the financials are getting squeezed because the interest rate, or what's called the net interest margin, is getting squeezed for the banks. They need a big spread between what they can borrow from the Fed and what they can lend out. And so as a group, they got really hit. This is healthcare, down 2%. Industrials, down 2.4%. Telecommunications, down 1.5%. But look at this one. For the day, it was actually up almost 0.75%, but it is on a 9. These are the utilities. And both the utilities and the REITs, real estate investment trusts, were actually up not only for the day today, but the week. Here is the daily. We'll look at this tremendous move up. It did pull back during the day, but it was still running counter to the market. These tend to be anything that has a higher yield than you can get from bonds in general or treasuries specifically, tends to do very well when interest rates begin to drop, because those yields won't drop for a fairly long period of time. The home builders, after this tremendous run back up to the top, we had a 9. We didn't get above this setup trend line. and we've been pulling back ever since. Clearly, we've broken the uptrend of the home builders. So when I put all of this together, I want to just look at one more here, which is the technology. We had the 9 on the daily yesterday, down big today. And on the weekly, we had a 9 last week. We had blown all the way up through the setup trend line and reversed this week because of today's action. When you take a look at the daily for the technology, you can see the size of the candle, and closing very close on a daily basis to the lows from yesterday. So we've basically reversed in 24 hours this entire candle, and now we are sitting right at a point where we could begin a 1 to 4 period, in this case a daily, and in this period in on the weekly the same thing, 1 to 4 weeks. So the question is, what is going to happen over the next 1, 2, 3, 4 weeks? Because we could actually be reversing below all of the things we talked about yesterday that are necessary for me to go fully bullish. My answer to the question, is the stock market bearish at this point, is no, it is not. Are there signs that this reversal at this point in time and at this technical level are such that we need to wait at least another week before we make a decision to jump into this market? Now, I know that's very frustrating to a lot of people, particularly those that I am managing money for or consulting with, where I keep saying the best place to be is in cash. Let's wait, let's wait, let's wait. I was hoping that we would get a strong close today for the week, because if we did get a strong close, we would be able on Monday to enter long positions. And I said yesterday I was ready to go 100% into the market because of what the inverse head and shoulders was saying about the S&P. But that's no longer the case. We had a very weak Friday, making it a very weak week and pulling us back down below those levels we needed to be in. So again, I don't mind missing a trade to the upside, but I don't want to put money into a trade where I'm risking cash, which is perfectly safe. People that had $500,000 in cash at the beginning of this week still has $500,000. People that had $500,000 in cash yesterday and were frustrated that it wasn't being put to work didn't lose anything today. And almost every other sector of the US stock market lost anywhere from 2 to 4%. And that means $10,000 to $20,000 off that $500,000. I would much rather be in cash waiting for signals to tell us it's time to get back in. So concluding, we want to do it in 30 minutes. Turn it back over to Leah. Tomorrow is the big day. I don't know how we keep doing this. We did it in December, saying that this is a very critical time for the market, and it turned out we were in for a 4-month run up to the upside. We're doing it again this weekend. I said yesterday and have been saying for a week that this is a very critical time for all the markets: gold, silver, the dollar, interest rates, inflation, and the US stock market, and therefore the world markets. And we are going to spend the next 2 days together breaking down in great detail using Hyperwave all of these very current problems, which include a lot of hyperwaves. And we're going to break those down, hopefully, so that you can see exactly where we are from my point of view on a technical basis at this rather amazing turning point or possible turning point in the US economy and the US stock market.
I'd say you got some great questions, and how about we keep going until I get kicked out of this coffee shop?
Great.
Okay, well, let's start off with what I actually think is most important. We were talking about it, which is that we have finally inverted. So let's just start there. What are your thoughts? That actually was a great question, so I'm going to read the whole thing. The T-bond inversion this is good. Is the independent variable favorable for gold, crypto, and commodities? Big question. Great one for asking, by the way, guys.
Yeah, the correlation between an inverted yield curve and therefore the possibility or probability of a recession occurring is really only between the US economy, the US stock market, and the yield curve. Having said that, when we go into a recession, if we go into a recession, if we go into a bear market, remember that Bitcoin has never been in existence, wasn't in existence during the last bear market. So we have no way of telling what the crypto market is going to do. We know what it will do in a bull market, and that is Bitcoin in the US stock market bull market lasting 10 years had 3 boom and bust cycles. During the strong bull market in stocks. And the last of those took place during a period of great strength in the US stock market. We don't know what's going to happen during a period of great weakness in the US stock market. So let's just put the crypto world aside. We just don't know. Tone has talked about it before, that a recession and a big bear market and rising unemployment is not the kind of place that most people want to speculate on something like crypto or Bitcoin. If it was much better established, then you might get movement out of the US stock market into something. But the tendency is that in a period of weakness in the economy and the US stock market, money flows into the safest assets. That's why we're seeing the utility and the REITs that pay very big yields relative to the treasury market and to the corporate bond market get big inflows of money, because the thinking is it's a much safer place to be. I would posit that that is not the way the investment world looks at crypto and Bitcoin. Now, the second part of the question is, what does it mean for bonds? And what it means for bonds in almost every recession and sell-off in the stock market is the bond market does very, very well. So you can assume that people getting out of stocks are going to move large portions of that into the bond market, causing bond prices to go higher and causing interest rates to go lower. It also means that inflation is not the problem. Therefore, gold and silver will probably be very weak. Take a look at the drop in gold and silver during the 06, 07, 08 period. And that makes sense because there's no pricing power and therefore no inflation. And you find the commodity markets in general, as we just saw with lumber, with oil, with copper, and it's true with zinc, tin, aluminum, and other basic commodities do very poorly during a recessionary, disinflationary, or deflationary period. So I would not hang your hopes on if we have weakness in the US stock market and the US economy, that any of those areas are going to be a beneficiary except the bond market.
Whoa, Tyler, I was just told and I looked it up. So Mueller's report is actually live right now. He just submitted it.
What was that?
Mueller's report
Oh,
is
this
he's
came
talking
out?
about it live. He just submitted it.
Oh, fantastic. I can't wait to read it. That's either going
Oh
to
my
be very
gosh.
good or very bad for the market.
But I think it's going to be very important.
Definitely very important.
Wow. Okay. Yeah. That's, oh, I'll ask just one more. Obviously, well, it's really a follow up to what you're saying, but in a phrased in a different way. What my question is here? Okay, there we go. The question is, Tyler, do you think that people are being overly optimistic, hopeful, and ignoring the warning signs? And then just as a follow up, right, like, because again, I mean, what headlines are we not seeing? That there's been a lot of, prognostication about coming recession, but you also see, like, I was reading, you probably know about Krishna Guha, is that how it's pronounced? But the central rate strategist at Evercore ISI, he's saying it's premature. I mean, again, with this week, like, on top of the past, since December, since everything, it's just like, what are we even thinking? But the specific question is just, are we being overly optimistic and hopeful and ignoring these signs?
Well, it depends on who we are. You know what our position has been? Our position has been completely out of the market until December, and then 50% in the market and 50% in cash. And that's still where we are today. And I think that's the right positioning. A 50-50 kind of a position right now, particularly if some of that money is in bonds or in convertible bonds that have high yields, or in REITs or in the utilities. If you're in any of those areas and only have 50% invested and the rest is in cash, I think that feels like the right mix. It did yesterday when things were looking bullish. I believe that the US stock market is going to be net up for all of 2019. I said that on the Kaiser report back in November. But that's different than saying, where are we right now? And do we have to worry about another intermediate term drop that could be as big as the one from September through December, which took us down 20%. And so I am just where I was yesterday, in a position where I will either be going fully invested 100% if we can break out to the upside, or fully negative 100% out of the market if we roll over here over the next 1 to 4 weeks. If you're talking about the public in general, I think they are too optimistic. A lot of money flowed into equity ETFs and mutual funds since the December bottom. In some cases, it was almost historic how much money was coming in. So when I kind of look across all of the money managers that I follow, I think it's split. Rosenberg is very negative on the downside. A number of others are very bullish on the upside. So I think it's a 50-50 split, with most strategists, most CIOs, chief investment officers, somewhere around 50-50. And that's one good reason to be 50-50 yourself, and not be too heavy into stocks and not be too out of stocks until we get more evidence. And the only way you really get evidence is by getting down to the technical level. Opinions, no matter how smart people are, fundamentals, no matter how strong they appear to be, only is step one. You've got to get right down to it like we just did and see what the evidence is, where the money is flowing, how people are voting, and right now it's split.
If we open below 2,800 next week, are we going to have a color flip?
Well, it depends on which index and over what time period. We looked at some dailies and some weeklies that it'll be very difficult to flip the weeklies at this point, because on the other side, you've got to go back 4 weeks, basically. And they had such a big run up that we haven't gone down far enough. The dailies, yeah, absolutely. Some of them have already flipped to the downside. But just keep in mind that 1 to 4 week pullback. It can be 1 week and it could be over as of today. It could be another week or another and another, or something in between. Or if it begins to accelerate, we could get a 9 count to the downside. Don't ever overlook those 9s. It'll be good to talk with Tone early next week, because he felt we could get a little bit of a pullback. And he said if this day closed strong, he would ignore the 9s and be fully bullish. And if it closed weak, just the opposite. He would never go into the weekend with that kind of an action. And because of that, I know what he's thinking right now. He would not be in this market, even though he is very bullish, and probably more bullish than I have been.
All right, let's finish with one more question. All right, let's finish with Bitcoin. Do you think that Bitcoin's going to fall with the stock market?
Yes, I do. If the stock market falls, I think Bitcoin is going to fall with it. If the stock market goes up, I think Bitcoin is going to fall opposite it. I don't see any strength in the crypto market. I don't see any strength in Bitcoin. I still have very strong doubts that we can get over 4,000 to 4,200. If I'm wrong and we are able to get over that, I have very, very strong doubts we can get over 4,800 to 5,000 before we turn lower again.
All right, Dr. Hyperwave, you want to tell everybody about the webinar tomorrow? I'll pull up the link really quick, and then we will allow everybody to have a wonderful Friday.
That's great. Thanks everybody that has joined us in the last couple of days. I know we've been flogging this to death, but I think it's not for our benefit. It is for as many people as can listen to this. I think the timing is perfect on it. You know, I'm a big believer in this thing called Hyperwave. There's a very tiny number of people, 150 or 200, that have been exposed to it. Those that have are believers almost clear across the board. They're very grateful that they have learned it. I know you will too. If you have missed the first couple that we have done, this is the perfect one to be stepping in on. You can see what we're going to cover all day tomorrow. We're basically going to break down 7 hyperwaves. We said yesterday it was going to be 4 or 5. There are 7 hyperwaves that I have actually traded with real money, and in some cases, a very substantial amount of money in the billions based on this theory for very large institutions. That wasn't true in the early days when I was by myself as a broker and I just discovered it. But we're going to take 7 in a row over a period of time that starts all the way back in the 1970s. And then we're going to go to hyperwaves in the 1980s, the 1990s, 2000, 2007. We're going to look at Bitcoin. And in each of those cases, what we're going to do is show the thinking on the way up, the thinking on the way down, what impediments to trading came into view depending on what I was doing professionally at the time. I'm going to let you know exactly when, where, and how I was able to maneuver through not only the bureaucracy of very large institutions and management of discretionary money that puts tremendous limits on what you're allowed to do, all the way through a couple of them where I was able to do everything I wanted to do that Hyperwave was telling me. I think that will be very interesting for people. Some people are a little bit nervous that because these are all historical, they've already happened, except a couple that we're in now, such as Bitcoin, that to me is 90% complete, but it's historical. We had the run up, we had the drop. That's why on the second day, what we're going to do is we're only going to look at active hyperwaves that are active right now. And we're going to look at them phase by phase to show the kind of thinking that I've used for 30 years on the historical charts. We're going to look real time at what's going on with various indexes, various commodities, as well as a number of stocks that are in different phases. So by the end of this, anyone that hasn't had a complete picture of Hyperwave will have it. And remember, you can always go back and look at other ones. And anytime you do that, there's this very substantial discount that you will receive on those new ones.
And I will say the discount this time before I get more craziness from you. Oh, no problem. Sorry. Okay, so for everybody who attended the first one, you get 75% off this one. So it only comes out to $250. And then for anyone, I know it's confusing, who buys this one and wants to buy the first one, you get 50% off that first one. So, and just so you know, without confusion, that you don't need to see the first one to see this one. They're totally different. You like, oh, we just got a tip that's so exciting. But they're really different. Obviously, they're very complimentary. But for this one, I'll send you a couple of vlogs. It comes in the email on Consensio and Hyperwave. You'll be up to speed. And this one, again, is specifically, really focused on trading. And I think it's just going to be awesome. But of course, I'm a little biased. All right, Socrates, stop texting us. We need to go get Tyler. We need to go get back to work.
Yeah, I think we do. I've still got some more charts to work on. I know Socrates is working hard on some new charts for tomorrow. So thank you all very much. Hope to see you tomorrow and on Sunday. If you can't join us live, that doesn't matter because you will have these for the rest of your life. You'll be able to go back and look at them, ask us questions about them. So if it seems inconvenient, erase that from your mind. Thank you very much, and we will see you tomorrow.
Yeah, bye. And I did get your question, Will. On gold. We will cover that next time. We will let everybody go, and happy Friday. Have an amazing day. And yes, see you tomorrow. And yes, as you guys know, smash my inbox. I am happy to answer every single one of your emails. And yes, I do answer them personally. Okay. Bye, everybody.
Great. Bye-bye.
And I'm going to say thanks, Marcel, for our HODL hats.
Yeah, great.
Bye.